What is a bull market? A bull market means a rising upward trend. It means the economy is doing really well. It means the FIIs and FDIs are investing freely into India. In a bull market, the common man, the citizen of India is able to make good money, is able to pay his taxes to the government, and most importantly, he is able to generate savings. And in a bull market, these savings are getting back into the system by way of bank FDs, stock market investments, insurances, etc. by whatever way, but the economy is getting reboosted financially. These are some of the classic characteristics of a bull market. What is a bear market? Well, first and foremost, the stock market is crashing. All the stock prices are going down. The economy is in a very bad shape. No new FIIs, FDIs or investments are happening. Businesses are facing recession. Inflation is steadily increasing. The corruption starts to increase. People are unable to pay the salaries, taxes, EMIs, interests, etc. No new savings are happening and the existing savings are getting eaten up. There is only negativity and bad sentiments all over. Only bad news coming in 360 degrees. These are the classic characteristics of a bear market. Hello my dear friends, Namaste. I welcome you all to my YouTube channel, The CA Power, with yet another topic. Today we are having a very important discussion on the bull market and the bear market. And I promise you it is going to be the most in-depth and crystal clear analysis of the topic that you are going to find on YouTube, on Google or on any other search platforms. Many times we wonder with regard to the stock market, why do we use animal terminologies like, for example, a bull or a bear? What are these animals got to do with regard to a stock market? Well, let us understand that bull is an animal that is used by a farmer for plowing his field, growing the crops, harvesting, selling and making profits. For all these things, the farmer is using the bull. The bull is a very energetic and enthusiastic animal. It's a very strong and steady animal. It works in the field and helps the farmer to make profits. Hence, a bull market indicates strength, indicates positivity and optimism, and it is a very easy situation to understand that the markets are positive and the businesses can generate profits. On the other hand, bear, the animal, is a very lazy animal. It hibernates, it sleeps for months together, gets up, eats and again sleeps. Hence, a bear market denotes lot of negativity, pessimism and a downward moving trend where the markets are crashing and all the stock prices are constantly falling. So, a bear market is a negative situation. There are a few other animals used as well. For example, pigs, stags and wolves. So what are stags? Stags are the people who only concentrate on the primary market. The stock market is a secondary market. So the stags are the people who only concentrate on IPOs. They invest in IPOs and with the first opportunity, they sell, exit the stocks and make their profits. So these are the stags who only concentrate on the primary markets. Next comes pigs. Pigs are the people who are very hasty and impatient. They want to make quick profits in the stock market without any study, strategy or analysis. They invest their money but naturally at the end of the day they lose their money and they learn the hard way. And then what do you do? They just exit the market. These are the pigs. Next comes wolves. Wolves are the people who want to make quick profits and big profits, and for this they adopt unethical, unfair practices, and most of the times they also indulge into a lot of scams and they get into a lot of legal issues, police and court cases. So these are the wolves. For a bull market to be called as a bull market, it has to perform for a considerable amount of period. For example, at least 3 to 5 years. The economy has to perform well and it has to keep on going up. Only then we can call it as a bull market. Similarly, even in the case of a bear market, the economy has to be in a bad shape for a considerable period. Only then we can call it as a bear market. For example, the 1925 to 1929 bull market, the 1993 to 2000 bull market, the 2000 to 2008 bull market. These are some of the famous bull market runs. The reasons can be many that trigger the positivity within the economy, but the positivity, the optimism, the rising trend has to sustain for a good amount of period. For example, at least 3 to 5 years. Secondly, the market takes a very long time and it's a very slow and steady process when it starts rising up. And there are many factors that contribute for the market to get into a bull run. Some of the factors that trigger a bull market is, first and foremost, political stability. Secondly is pro-government business policies. Thirdly, investor support and investors encouragement. Fourth is infrastructure. Fifth is ease of doing business, and such more other policies. These are the classic factors that help the economy get into a bull run. In bull market, people are optimistic, people are positive, people also become greedy and they want to invest and they want to make profits because the scenarios are very progressive and very profitable. There is massive trust factor in the government, in the businesses, in the trade and commerce, in investments, and people see lot of profitability. Even foreign investments keep coming in. Even the local people invest, expand, diversify, because they know that whatever hard work they put in now, they are going to get the profit. By and large, the thing to understand is bull market is a very easy scenario to make money. In bull market, everything is positive, things are looking very easy, things are looking very conducive, upward moving trend, very optimistic. People know that they can make money. They are not hesitant to invest, and in fact they are very enthusiastic. The sentiments are positive and everyone is very enthusiastic to invest, to scale up, to diversify, to start up, and things look very comfortable and very profitable. In a bull market, that is in a rising economy, that is in a steady government, that is in a profitable situation, people know that they can earn profit and they want to earn profit. A bull market, a bull run can have intermittent bear phases. These can go on for about a few days, to a few weeks, to a few months, or even 1 or 2 years. So a bull market, a classic bull run, will have dips and will have falls, which are termed as phases. These are the bear phases. All the problem starts when the economy starts getting into a bear market or a bear phase. The 1929 Great Depression, the 2000 to 2002 bear phase, the 2008 financial crisis, the Nirav Modi scam, Harshad Mehta scam, the Vijay Mallya fall down, the Satyam scam, the Lehman Brothers fall down, then the COVID 2019 to 2021, the COVID run, and then latest the Ukraine war. So these are the classic examples of a bear market or a bear phase. Now what people feel is, in the bear market, they should not be investing money in the stock market because obviously they are going to incur huge losses. There is a very famous saying by Mr. Warren Buffett that if you are not willing to own a stock for 10 years, don't think of owning it even for 10 minutes. But the smart investors know that bear market is a situation where you can get the very same stocks at a very low price, because the stock valuation in a bear market becomes very low. So you can get the same stocks at the very low price. Then what is the problem? Where there is only one condition, caveats apply. There is one catch to it, that the companies can crash. The companies can fall. So before you buy the stocks in a bear market at a very low price, make sure that you are well aware of the management of the company, that the company is steady, that the company is strong, and the falling stock prices are only the result of the bear market, and otherwise the company is performing very well. The management is strong and steady, and basically it's a cash rich company. Basically the debts are low, and basically the promoter stakes are high. The company which is a cash rich company, where the debts are low, where the promoter stakes are high, and the fall of the stock prices is only a result of the bear run or the bear phase or the bear market, and otherwise it's a very sturdy company. And once the economy is out of the bear run or the bear phase, the stock markets are again going to boom and again going to so these are the kind of stocks which can be in your radar where the economy is in a bear market or a bear phase. So what should be the strategy in order to make money? What should be the strategy to make profits? Well, in a bull market strategy or a bear market strategy. The bull market strategy is very simple. Buy cheap, sell high. Buy low, sell high. The bull market strategy is very easy. Buy low and sell high. In a bull market, people want to buy, people are optimistic, they understand that the strategy is very straightforward and very simple. Try to buy low and sell high, and at times even if they end up buying high, they don't mind to hold until the stock prices go up. What can be our strategy in the case of a bear market? In a bear market, two strategies are possible. The first one is going short, that is, you sell first and then you buy. It is possible only in the case of an intraday, wherein you sell the stock first and before the closing of the market, before the end of the day, you buy it again so that the transaction is squared off. It is called going short on a stock, wherein you first sell the stock, you sell high, and then end of the day you buy low. So this is the first strategy, only possible if you are indulging into intraday trading, which is, again, my disclaimer, a very risky situation. Strategy number 2. You pick up the stocks of very good companies which are available at very low valuation, at very low prices, and you buy stocks and hold the position. You hold the position because you know that you have got the stocks at very good price, and let it increase. Let this, for example, in the COVID-19 situation, many people purchased some of the very good stocks, and today the stocks have increased many folds. They've gone 5x, 10x times of the purchase price. Even in the case of the latest Ukraine war, the prices of most of the stocks fell to the rock bottom. So in such situation where people can predict that it is only transitory, that the stock prices have fallen, it is a very good opportunity to pick up good stocks, hold the position and let the stocks go up. Friends, the stock market is not a gamble. It's a highly regulated market. The companies which are listed are controlled, monitored and governed by strict laws and regulations. The SEBI, that is the Securities and Exchange Board of India, is the main governing body. The Ministry of Corporate Affairs, the RBI and other legal wings are the agencies that govern it as well. Highly qualified professionals like the chartered accountants, MBAs and other finance graduates constantly keep making their study into the research and analysis of the stocks and of the companies. So before you start investing, make sure to do your due diligence and proper analysis and then pick up the stocks which you feel are right for you. I'm going to be coming out with a series of videos on the analysis, on the market analysis and the methods of picking up the stocks. So make sure you are in tune with me and watch out for these upcoming videos. Friends, in the context of stock market, your self-worth is determined by your net worth in your balance sheet. So in order to increase your net worth, make sure you keep listening to Naina Raj Purohit. So if you're new to my channel, make sure you subscribe to the CA Power and like and share so that together we grow. And I shall see you in a brand new video on a brand new topic very soon. Until then, take care. Thank you.